Hi everyone, welcome to another episode of World of Oil Derivatives. I'm Greg Newman, the CEO of Onyx Capital Group. I've got the research team in today again, bar Ehsan. So this time Martha's come in and replaced Ehsan. We've got Audrey and Vincent. We're going to be talking about the latest events in oil and headlines around the world, and even branching out a little bit into renewables. So I hope you enjoy. Okay, so let's start off with the oil price, or Brent crude futures price. It's pretty much back to where the levels were before OPEC Plus announced. That's the big news, I guess, because a lot of expectation in the wider macro market of oil to perform. Talks about stagflation, all the rest of it. But in the professional oil trading world, it seemed like the hedge funds and majors, the guys that hold huge positions throughout the year in huge size, they actually liquidated on this event, and there's clearly a bit of pessimism about where the crude futures can go from here. Hedge funds are the ones long and in this trade, and usually they're quite reactive to macro sentiment, which seems to be fading a bit this week. So all in all, not really too surprising. What do you think, Audrey?
And yeah, in terms of macro things, I mean, news that's come out this week, I mean, crude stockpiles falling in the US by quadruple expectations. So that was a 4.6 million barrel drop versus 1.1 million barrel expected. And that saw no bullish reaction, which I just really think goes to show that, you know, the appetite there for prices to go higher. People just really don't have conviction that that's going to happen anymore. I know the GDP stuff from China did come out during the week, and I guess that was a little bit positive for the oil bulls. You know, the growth in Q1 was kind of as expected, even a little bit higher. But if that can sustain the market, you know, in the high $80, $90 per barrel levels, I don't think it can. If you look at kind of Europe this week, you've got, you know, France and Germany, their manufacturing data. So PMI data came out showing their manufacturing services are in contraction. They're two of the biggest economies in EU. That's a really, really big thing. You've also got the Fed and the ECB, you know, planning on interest rate hikes again in May. So, you know, recession fear is really, really playing on market
They've come
sentiment.
back again, haven't they? It's pretty big news. I think what we got to talk about, just while we stick on oil before we get to wider macro, is the refinery margins, right? So just the product prices minus the crude prices, and down the forward curve. They've taken a serious hit this year. And I think in comparison to 2022, I think there was probably an expectation that they were going to stay very strong. But, well, everything you've been talking about, it tends to filter into the products. And you see a big crude stock draw in the US, but that correlates quite nicely with a return of refiners back online from maintenance in the US, up to 91% refinery rate. So it doesn't have to be bullish, because ultimately it's a supply thing, right? You buy and clear that crude, you're going to convert it to products, and then it's going to be a product oversupply. And we know the gas oil crack's been taking a hit. Now gasoline cracks are taking a hit. The French refineries are back online. They're producing. So can the market sustain itself? That's kind of the question we're talking about, right?
Yeah, definitely. And I think if you actually look at the gasoline stocks in the US this week, I mean, there was a build versus an expected draw again. And, you know, prices in those RBOB and rubber took a massive hit, like following that stats news. And now you're seeing, people kind of selling that ARB as well.
It's always the lag thing. Like, so 2022 was and 2021, right? It was all like the narrative that was gaining traction was we took this transition too abruptly, too quickly, and too violently, and now there's not enough investment in oil, and look what's happened to the prices. To be clear, that's just a narrative, right, which helps people trade. The reality is the prices did get higher. The refinery margins did get very high, and the crude prices got very high. So investors get excited, and private investors for refineries especially get excited, because you can buy refiners cheap as chips at the moment because of divesting, right? These majors divesting and selling out their refineries. So you pick up these refineries and lock in the margins on the forward curve. You generate a huge amount of cash and a very valuable asset straight away. So Javier Blas, I should probably get it up actually. He talked, I think this morning or yesterday, refinery capacity has gone up, is due to go up like 3 to 4 million barrels per day this year. And that's clearly a lag, right? You have the reaction in 2022, so people decide they want to invest more, and you get it the following year. But it's always the same thing. It's too late, really, and you're gambling on a sustaining situation from the year before. So now you've got a much less poor kind of supply deficit scenario in the oil market. You've got refinery margins that are weaker, but you've got refineries coming online to produce more refined products, and the market just can't really handle it, it doesn't seem. So that's why we have to kind of relate back to the OPEC situation, which is they cut again, huge number of cuts now, and the market hasn't reacted as they wanted to, and the refinery margin market looks weak, and there's still the refineries to come online. There's still producer hedging that doesn't seem to be in the market. So there's a lot of downside, I guess, for oil right now, and the diminishing impacts of OPEC, even if they were to cut again, to your point.
Yeah, that is true. Even this week, or even in the past weeks, you would usually see in a normal situation, there would often be refinery hedging in the back end DFLs, of course, because they want to be hedging their buying in the future. But in the past week or so, we haven't really seen much of these deferred buying in DFLs in Q4 or in CAL, suggesting that because refinery margins have come off so much in the past few weeks, there is less incentive for these refiners to lock in these relatively unfavorable margins, or perhaps it was because they have already utilized these the high refining margins in the past 2 months, from February to March. So the hedging cycle has sort of finished, and maybe they're waiting for prices to come up again. But in that sense, yes. So like you mentioned, Greg, 4 million barrels a day extra capacity, and perhaps that was a reaction to last year. Do you think it might have? So of course the market, more refineries are being built. It's compensating for last year. Do you think there's a bit of an overcompensation with all of this coming online?
Sorry, you asked the question.
Yeah,
Okay, I thought you were being rhetorical. Yeah, no. That's the general point I'm trying to make. Is in, okay, the assumption was last year everything's so bullish, you've underinvested, we're screwed. We took this transition too abruptly. Now we're in a situation where OPEC have cut like to the levels which are, lower than 2020 when none of this was going on. So they're back down to below 10 when they were 12 in the peak in 2020. So we know there's plenty more oil from OPEC to come online. They clearly just misjudge, or a lot of bull traders, and the whole market seems to 90% of the time want to be bullish, and they just believe their own hype. So if you believe your own hype and all the research reports and agencies and consultants come out and say, look, you've underinvested, you need to pile in again, what do? You buy assets, refineries, and in the meantime, they haven't considered, did we get this wrong? The US volume seems to be picking up every single day, despite what people say. The exports are picking up. The market's clearly handling the situation and delivering more than enough refined product to the market. There's not the disaster that everyone was claiming. And now you've got a situation where you surely can't cut anymore and you can only add. So in this game of chicken we were talking about last week, US, do they buy back their oil versus do OPEC produce more and end their cuts? You got to say it's leaning towards more OPEC bringing more oil online, right? So if oil sells off another $10 or $20, at that point, I don't think you're making enough for you to justify all these basically all this loss in revenue from the barrels you're not producing. And I think the rest of the producer group gets frustrated, and you'd rather fight for market share. But you spend a lot of time losing market share, not only to US going into Europe, but also Russia going into India. So not to mention Iran and all that, competing to deliver to China. So bit of a bad play, I would say, it's looking like. But
that is an interesting one, because for all the talk about Saudi and Russia collaborating a bit more together following after the events of last year, ultimately there is still a point of contention, specifically with oil production in the markets, because previously, of course, Saudi exports a lot of crude oil towards Asian countries, but over the past year, their barrels are trying to compete with cheaper Russian crude, which is making its way to China and India. So, of course, it's not everything is rosy. There's still points of contention here. So it still comes back to, okay, is there still gonna be some unity in OPEC, or is it?
Yeah, when you're at the extremes of the cuts, right?
Yeah.
And another bit of news I forgot to say actually was US is saying that they could be buying back their SPR in Q3 is the plan if the price is right. It really doesn't sound like they're in a rush. I think it's probably the smart move to not be so concerned, as in there's plenty of oil in the US. If an extreme situation does happen, which is what the SPR is for, they've A, still got a lot of oil in there, but B, they've got enough domestic supply. So I just don't see the panic. So I'm starting to lean towards more this market selling off and kind of OPEC losing control personally. But I mean, things can change so flippantly these days. But slightly moving on from that, you know, it's the macro bearish sentiment. We thought we were a bit out the woods, I guess. I mean, that was certainly seemed to be the investor sentiment. You know, all these predictions of recession and inflation going wild, and it did start to come down. And now, kind of overnight, when the inflation reports come in, it was centered on the UK, but it feels like a bit of a worldwide sentiment because of the UK reports. So back up to 10%. More Fed rates coming, pretty big deal. So I think the interesting part there is 10%, back up to 10%. If you net out food and energy, it's 6%, but 6% is still huge inflation. So it's the trajectory that was looking promising, not the level, but going back up, it's a bit of a disaster. So I think that has to, the contagion, right? It just feels like in the macro world now, in the investor world, everything is so linked. It's like it's social media effectively, right? Like one thing happens like that, it just changes everyone's opinion on a sixpence, right? So it feels like the macro sentiment is back to bearish, back to Christ, are we going to have a proper recession now? And I guess that has to feed into oil. It's just simple as that, right? I mean,
yeah.
Not that much you can add to that, right? It's just the way it is.
Yeah, but I think, I mean, in terms of the sell-off that we saw a couple of weeks ago following like the banking crisis, I mean, that was pretty aggressive, and obviously we could have kind of preempted that a little bit looking at the CFTC data. That's not the way the data is looking right now. It's not like that massive short skew. Sorry, it was actually really, really long at the time where it was kind of just oversaturated. So I think it probably will move down, but maybe not as aggressively as like what we saw 2 weeks ago, which I don't know, maybe some people might be expecting again.
Well, I think that can only happen if the producers panic and sell.
Yeah.
Because I think the data shows they're not invested nearly as much as they used to or normally are. So do they say, right, shit, we better lock in these prices right now? That's a hell of a lot of volume to come online with no one really to take the other side, unless the oil traders get back into the trade, which I think is doubtful whilst we're here. So if they put in some selling volume and the hedge funds stop out, I mean, you've got 10 to 15 barrels lower, I'd say.
Really?
But then we can have a proper discussion, like where do we go from here? So, you know, what happens when oil is back down to 60? That's immediately going to help inflation, which would be a nice thing. And then you can kind of get that kind of consolidation and a restart to the conversation about how the global markets kind of recover. But big ifs, right? And I think there's an element of, I even feel it myself, getting a bit carried away with the confidence in that the recession didn't come as it was expected in Q1 and Q2.
Yeah.
And it's like, okay, great. So now you can buy equities again. You know, the market looks healthy. You're getting a return on your portfolios, blah, blah, blah. But it's like, no, hang on, we're not out of the woods. And as we were kind of saying last week, it's almost like the gas market and the diesel market was like lazily short.
Yeah.
Just because things are over, but you know, it could very easily spike again, and overnight you've kind of just, it's just the same old stuff. It's just a bit worrying, I guess. And I think it seems like the net reaction from the market is just, let's just stay out of it. Especially as WTI Midland gets into, we still need to see how that plays out in the Brent complex, which is a big deal for the rest of the market. Let's just see how this plays out in the next month, and then maybe there'll be a move again.
Yeah. Yeah, no, I agree with that. I think another one took as well was just the gasoline. Like, I think we mentioned it in like TMNs yesterday. There's like big, massive increase in open interest, but still way lower than like the 5-year average, which just goes to show like there's a lot
gasoline.
of like, and gasoline.
Yeah,
it's the ARB actually in particular, this stuff, but it's like just shows how risk off people are now at the moment, because it's just super volatile and people do kind of lack conviction of like which direction, because I guess mainstream media is, you know, pushing one narrative one day, one narrative the next. And they're hot and cold, and it is really just, I think it's really hard to justify things being really bullish, well, definitely in terms of crude, but I think
well, it's just think of it from a return point of view. How do you justify to your risk manager to get long again? It's just not working, and there's a lot of uncertainty. It's just not a compelling reason. So you will still get the research analysts calling for 100, because that's all they ever do. And obviously you will still get OPEC saying that they think oil's going to get higher and demand's going to get higher. But put it this way, I mean, if a trader came to me and said, can I put on a long position? I just say no, basically, in the outright price. It's just not compelling at all. Almost annoying you can't keep talking about that. It just feels pretty binary. We just kind of got to wait. But I guess the other thing is, like, following on from that kind of inflation discussion, it's very kind of focused on, as I say, like food prices in particular rising, which is, you know, a real headache, and energy prices as well. But it kind of brings back into discussion the renewable side of things. And I think that kind of narrative was kind of detracted for a year or so as the global markets really struggle with energy prices. But now they're kind of down back to reasonable levels. It feels like that conversation's heating up again. And in the news was the Just Stop Oil stuff, which is gaining kind of a lot of people's attention again.
Yeah, no, definitely touching on that a little bit. I mean, I guess you mentioned it yesterday in terms of like, the prices are coming down, but I guess for consumers, I mean, I know for myself, and I'm sure lots of people like listening will know that like my shopping is still much higher than it was like, you know, before the war, before all this energy crisis. So, and the same with like, you know, if you're driving a car, like the petrol prices are still really high at the pumps, even though we all know, you know, they are coming down, but they're still quite high. And it's
that's a good point. Actually, we need to say that because that's a key thing, right? The retail prices that we see, that there is a proper correlation with especially the European swap prices. But the thing is, it's got to be lagged, right? So we know that the gasoline cracks in particular, and even the diesel cracks, were very well supported when the French refinery strikes were offline. So all the European swaps contracts were very well supported in those two markets on the back of that. And you had this spike in retail prices a month later, which makes complete sense. But at the same time, it's come all the way back down now. So we should be able to get that relief in the next month or two, which, just at least from a UK perspective, we should hopefully see that number be on the downward kind of trend. But food is one that's slightly... and
I mean, it's obviously hurting the poorer part of the economy. And obviously, you know, that's a big chunk of your economy. And if you don't...
But I'm saying we don't... I mean, that's oil's not the same, right? As in, like, that's it's an independent market, the ags. I'm sure they're linked macro-wise, but that I can't speak to really. So that seems... That's probably more of the longer-term worry, I'd say. Or at least near-term worry. It's
more the I guess it's gasoline prices, because it's that travel. I mean, it's moving food from X, Y, and Z around. Yeah. It's the cost of fuel prices.
Yeah, but that's coming down.
And people would have hedged that. Yeah, but it's going to take about 2 months before we kind of catch up to where we're at now.
That's kind of positive, right?
Yeah, I mean, hopefully. It is.
So the world really needs a massive sell-off in crude futures. Actually, that would be very helpful. So traders lock in. But yeah, I think just on the transition side of thing as well, I think we're going to be talking about it again and again and again. And actually, I think the next probably side of things is to never really talk about oil in isolation, right? It's all about the oil markets starting to be have a hybrid with electricity consumption and everything else that the world is trying. It's just, you know, I wanted to touch on this because of the Just Stop Oil. You know, we can go into it a little bit. You get pretty fiery debates about, you know, the point of like what they're trying to do and how they're doing it. But maybe before we get into that, because Vincent really wants to talk about that, is basically what I think we need to see, or at least talk about, is some of the things that's maybe not talked about as much with this transition, which is the oil market and the oil derivative market. You know, it's been going for properly, you know, 40, 50 years, free markets, or, you know, kind of free markets, and developing with great minds, great financial engineers, good traders, and a constant growth story. And why is that important? Because they've built a system that's very well functioning and links the entire world. So there's a lot of learnings from that market. So looking at the renewable market from the lens of an oil trader, the two clear things that point out and the differences are the physical arbitrage that you get from moving oil barrels around the world, and storage. So if you have physical arbitrage, and you know exactly what happens, we're not taking any more Russian gas and oil, well, you can get it from somewhere else.
Yeah.
Whereas in power, what are you going to do? You're going to get like a huge cable from Japan and link it all the way down. You can't do it. Transmission lines, I think like the maximum is like 1,000 miles, and they have very high what do you call it, like Say again?
Lots of loss.
Yeah, lots of loss of the electricity. Yeah.
Yeah.
So whilst these things might be improving, it's very unlikely. We know it's not going to happen in the next 20, 30 years where you can have anything like the kind of interconnected world that you have in the oil world.
Yeah.
And actually, a lot of it becomes about politics, right? So if you're moving transmission lines all across, France to England. I mean, France and England right now, it's all over the place, right? And it's all very politically motivated. Everything from the migration crisis to, obviously Brexit laws and things like that. So you can imagine, right, trying to get transmission lines like that and getting that properly going is going to be hard. But even planning law, right? So I was having a chat with Miles about this. He owns a lot of farms, and he owns the land. So he's not just going to. If you're going to put a transmission line through, you need to get permission from him, and think of all the politics involved in that, and think of the money involved in that. So there's a lot of infrastructure building that's needed. And if you can see how much gas benefited from physical arbitrage, like when gas moved into, obviously Gasline's pipeline network, but then when LNG, liquid natural gas, started to be a thing, you put that on ships, and suddenly when we don't buy Russian oil, gas anymore, they turn the taps off. We get it from Qatar in LNG ships. And that is a well-functioning, you look how quickly we got over this situation to some extent, right?
Yeah.
Power is just not the same. And that's what makes power such a tricky market to trade. So all the renewable is focusing on electricity generation through renewable assets. And then you've got a whole nother thing there about you produce electricity from renewable sources, electrolysis, these kind of things. You lose a hell of a lot of power. Really, when we talk about producing electricity, we talk about doing it from non-renewable sources, gray hydrogen, which is basically 99% of hydrogen produced is from oil. So the realities of like getting this market going and then getting arbitrage across the world like oil is light years away. And then ideally you'd have an oil derivative market equivalent in power that would allow, liquidity, stability in markets, people to plan forward, hedge. And that's been so beneficial for the shale industry to boom and that kind of thing. So I've completely rambled for a long time there, but the point is like that and the storage capacity that you need, that you have in oil. Like Venezuela's been off the market for however long because of the sanctions. They just put all that oil in storage. You can't do that with power. There's not nearly enough storage to just say, fine, if no one wants it, we'll storage. You get negative pricing all the time. So it's a mental market to market make and trade on the derivative side. It's a mental market for the physical. And there's so much development there. And if I was advising the government, I want there to be a lot of focus on that as well as just the assets.
Yeah.
But I don't think just stop oil kind of people are going to be engaging in this type of conversation. But I think that the pressure needs to continue from these. This is where we can get into debate. But like ultimately, I think they need to continue the pressure so we continue to do this. But obviously the real answer is not just stopping things. It's having focus in the right areas. But Audrey, you don't really think the same thing, right?
No, I do. I totally agree in some sense. But I guess just for a bit of context, for anyone that has been in a bit of a cave, what this group have been up to recently and why they've even kind of come up in chats this week. So they kind of describe themselves as this non-violent civil resistance group, and they're demanding the UK government stop licensing all new oil, gas and coal projects. Fair enough, sounds like a really good cause. The way they're going about this obviously is through like a series of kind of high profile stunts. So I mean, I guess the most notable one was the girls, I'm not sure, the group that glued themselves to the Da Vinci copy in the Royal Academy. And then most recently this week, so we had the guy, I think there was actually two guys jumping on pool tables or snooker tables at the World Snooker Championships and throwing just loads of chalky kind of paint over the table. I think we can definitely agree that, in some sense, I mean, we're obviously talking about them. That's what they want. They want everybody talking about them. But what really, really annoys me about this group is they're not coming up with solutions. They're not coming up with, any ways that they can like help at all. They're just stop. That's not helping anyone to do anything. Why don't you start like trying to, you obviously have this big platform. You've got a guy on a snooker table throwing paint. Like what's his slogan? Why is he not kind of telling people, well, why don't young people get involved in politics? We could do this, we could do that. Like they don't have a solution either. And I think that just sums up how complicated the issue is. I think that's what really, really bothers me is, people coming with a problem.
Yeah. And generally you don't want that in a business for sure.
Yeah.
But I think for real change to happen, you need that kind of political and economic solutions to come together. And that's what I'm arguing, right? And I think you need the political pressure, because without that, you can just use an argument like that, like there's no real easy solution, and just not do it.
Yeah.
And that's the excuse for not doing it. So I mean, they kind of say it, right? That we wish we don't have to do this. There's probably an element of the people doing it. You probably love the fame. Don't get me wrong.
Absolutely. Yeah.
But at the same time, like, as long as it's not hurting anyone, who keep it in the forefront of people's minds. You know, the UK needs to diversify away from, assets it doesn't own, i.e., commodities, gas and oil. It doesn't produce enough itself to sustain itself. So it makes sense it makes complete sense. But I guess, the only debate is when you start to impact maybe things that go outside sporting events, and they seem to have changed that, right? So the M25 stuff has stopped. Stopping the M25, people can't get to work.
Yeah.
And then there was horror stories of people not being able to see their, loved ones who were in hospital and things like that.
Yeah.
I'm pretty sure they learned from that. So, but if you ask me, it kind of, I don't mind it as long as it keeps going, and as long as opposed to giving just let's throw money at it like Labour wants to do. It's let's get smart about this and let's engage with the industry and try and think how we do it and be strategic. That would be my preference. But what do you think, Vincent?
I think it's always a good thing for these sorts of groups to pop up. I think Just Stop Oil was a couple of years ago we still have the Extinction Rebellion that was quite popular back in 2018, 2019, and then sort of stopped following COVID. And then, as you guys might recall, end of 2021 there was the Insulate Britain as well, which I believe
What was it?
Insulate Britain.
Okay, yeah.
So sort of these.
Well, that's quite practical, right? Is an insulate homes.
Yes.
I mean, that makes sense for sure. We've been saying that for a while.
Mm-hmm.
I believe they all come. The activists come from the same angle. I guess that's to focusing on the climate crisis, about the environment, as well as, of course, I guess Insulate Britain, that was quite a practical solution. But Just Stop Oil had the same sort of stunts and protests initially, blocking off the roads and stuff. But of course, it's good to have these sort of discussion groups along with against these oil and gas companies, the industry. That's part of the well-functioning democracy, I would say.
Yep.
Ultimately, but I guess like we mentioned before, the fact that we're talking about it, it's proving their point. Like, you have these stunts. That's why people will focus. That's why we focus our attention on them. The fact that they might be planning something. Whether it's legal or not, that's up to. Of course, that's what the government decides, but you might recall a couple of years ago, Extinction Rebellion there were plans to actually disrupt fly drones near Heathrow Airport, which was massively illegal. But just by talking about these things, you bring the issue of climate change to people's minds. People are starting to talk about these sorts of stuff.
And the right people are starting to think about what they do. So even us, right? What do we do about renewables? Yeah. Well, we're financial traders, but we have a huge service to the market. We provide liquidity, and that has huge value to the industry in terms of efficiency, in terms of developing markets, investing. So obviously we can be in these markets and help them grow. Like, we'll be the first ones into a hydrogen market once these things get going. There's the power market that already exists, but that will develop quite a bit. There's, credits, there's loads of things going on that we can start to think, how do we bring our expertise into that? And I would argue, would we have bothered had there not been the peer pressure, right? So that's kind of what you're saying. You're just a reminder, and then if you have a conversation about it, I don't think it's very helpful to say, well, you're in oil, therefore you're a bad person. You should be, well, you're in oil, so what are you thinking about the next step?
Yeah.
And you should be thinking about it with survival, because it is the future. We know it's going that way. So we spent all this time and all this amazing amount of brain power developing the system in oil and oil derivatives. Let's get that going for renewables. And I think that's really positive, and everyone's up for that challenge.
At the same time, even for oil trading, there's by providing liquidity, we're doing a massive service to the market, because from the activist perspective, of course, a lot of them would be against this, the rampant financialization and speculation in these derivatives markets, because, of course, over around 15 years ago, the global financial crisis, what was in their minds? It was because of these derivatives, these what they call, these financial products, weapons of mass destruction. So these sorts of these sorts of markets leave a bad taste in the general public's minds, right? And what are we trading in oil? It's all about the futures, the swaps and options as well. It's the same. It's the same type of market, and by providing these liquidity to the market, it's making the markets function better. What do you call it? Narrowing the bid offer spreads, that sort of thing. But at the same time, so often that people see, these trade houses, they're making so much profit off these trading, but no one, you can't do a Google search on them. You don't really know what they're actually doing, how they're making the money, what sort of trades they're making. But I believe we're one of the few companies that actually explore this sort of stuff and actually talk about these on these podcasts, and also produce articles and videos about this. So it's also part of educating the public. Don't you want to know what these guys are doing? We're just making democratizing all of this.
How does it develop the world? I mean, Martha, you're slightly newer. Do you resonate with that? Or
yeah, I think that, especially the oil and gas industry, who's dominated by such like massive, they've even become characters, like the democratization of it is definitely something that people should see as like a positive thing, rather than you're just another one of those, because I think in reality that's just simply not the case. And definitely with the bid offer spread and getting people in directions they actually want to be going, rather than it being super opaque and people not knowing what they're doing. I think that, and
but I'm saying that can help the renewable markets, right? I mean, that's got to be a thing, and it's a tough one for recruitment. I mean, and again, you can kind of tell the tone of the wider world almost by your recruitment, because 2 years ago, about 2 years and before that, it was really heating up in the media. We've got to stop oil. We've got these things are getting really like trendy, and you'd have people saying, I can't join this firm because you haven't got a sustainability policy. And they're okay, well, we need to get one. We need to think about this, and that's kind of fair enough, but they're really putting their foot down now. Not so much, it seems to be a bit of, because of the energy crisis, because of the war, it's like a bit more of a measured conversation. It's more like, okay, what are we doing about it, rather than you just can't. So I'm at least pleased to see that kind of reality check going with people. But I can imagine for younger people, it's really hard. Like, we actually had a junior trader who I really liked, actually. I thought we spent a lot of care and attention trying to hire these people, because they're the backbone of our business growth. And 1 in 2,500, we get one of these guys, and he's getting on well, and we like him, and he says, look, I just can't handle it. I feel too guilty being in the oil industry. And I tried to tell him, like, you're not on the wrong side of history. We're not bribing people in West Africa for like stolen barrels, and we're not corrupting people, we're not manipulating prices. We are helping the market be more efficient. All our services are about making the market more democratized and more transparent. And people say, why the hell would you do that? I said, well, you add value to the market, you add value to your business, and that there is both a cynical way to look at it and altruistic way to look at it. But for sure, if we're making markets more efficient and we're educating, like you're saying, Vincent, and then you move on to renewables or whatever, and if you can't be thinking that's a bad thing. If anything, you say, I'd much rather be in it and making the change and making the adaptation in the world than be out of it and just judging. So I do think that's changed a little bit, but I might be wrong. I mean, you guys are younger than me. How do you feel about in your peer group and your pressure? The pressure that comes from that.
In the interview process, there's still the question asked, like, what do you think about the industry? And I think 1 or 2 people in the first round of interviews the other day said, they
asked you, because we asked you in your interview, and you said we're fucked anyway. No, I'm joking. But
it's just so desperate.
No, what did you say? As in, they asked you this time.
Audrey did, and you said, oh, do you mind working in oil and gas?
I did have this. Actually. I had we were hiring for another junior, and I had several people applied that, their LinkedIn's had like them kind of looking into microbes to break down kind of oils and stuff, and another person who had their own company that was like a kind of a cycle to work scheme to make the world greener. And I was like, well, that's a great idea, but I was like, clearly you're really environmentally conscious. Would it not kind of pang you a bit to work in the oil and gas industry? And he's like, well, yeah. I was like, that's kind of not the answer I was kind of looking for. Like, obviously,
no, but he can say but as long as it's on the right side of history, and you're trying to do the right thing, right?
Exactly. And I think we all don't come into work, with the kind of shades over our eyes every day. Like, obviously, you do think, I would rather obviously this not be such a polluting thing for the environment, but it's necessary right now because of the way we need energy, and like, we do need to move forward. And I guess it's just back to like the Just Stop Oil people, like that's great and everything. What we don't want to do is ending up, biting off our nose to spite our face.
No, but we want the experts. Let's say you continue on, you're gaining expertise in this system and you help develop the new system.
Exactly, yeah.
That is a positive.
Yeah.
Like, we shouldn't be saying everyone who works at BP and Shell, you're bad people, because they're the ones that are going to make the change, right?
Yeah,
they're going to make the adaptations.
Exactly, and I guess they understand, demands of markets, the more supply-demand situation. Like, if they can apply all these, like, decades of expertise and move it over to the the green energy, to sustainable things, to at least cleaner energy.
Yeah.
I mean, that can only be a good thing. So I think, just stopping oil is just too, what I don't want to see happen as well. I mean, you said it yourself, like the UK obviously is going to rely on like imports. If we stop having enough in this country, we're going to start relying on imports. I mean, that can come from countries who don't give a toss about the environment. That can come from either like South America, or it can come obviously from America, like places that don't give a toss about reducing their carbon footprint. And that's not all we want to happen either. If we're going to stop oil here, we need to have a solution here too, so that we don't end up bringing it in from somewhere that's very polluting, that doesn't, because obviously you see it with refineries as well. Like different refineries will have like the countries will have different laws surrounding like how much pollutants that can be released into the environment. Obviously the UK is up there, like one of the kind of strictest in terms of trying to reduce what is released into the environment. What we don't want to do then is start importing from countries because we haven't produced enough here from countries that, like I said, don't care. We need to have solutions here too. Now, if you're going to stop these projects now, and we need energy now, we need solutions now too. And I guess, like we said, like that involves engaging with people who you mightn't like. You mightn't like the fact that, the big polluting oil companies like BP and Shell, what they do, but they could potentially be the guys that, make the most impact towards this green
I don't think
movement.
there's any potential. They have to be the people. They've got the infrastructure.
I mean,
there's the reason why the oil market really is keen on hydrogen, because, where there's the debates about its use, it has to be at least part of the picture. And it's because of the infrastructure, right? That it can be transported in the same way as oil, and it's all there. Yeah. And everything it's just a different liquid. I mean, there's density changes, and it's a lot of like adaptations need to be made to the technology, and it's corrosive to steel, Chinese steel, which is everywhere. These kind of things. There's a lot of leakage with hydrogen. There's obvious like bad side of things, or like not optimal things, but you see the point that they're like, but the infrastructure is ready and we can do this like now. Yeah. So it's better than just saying, oh, let's just like blow up everything in oil and just start again with renewables. It doesn't work like that. You make the adaptation, right? And I think that will happen. So, but I still think, like, probably mainly to you, Audrey, like at the end of the day, it's a necessary evil to have, or it's not an evil, is it? It's a necessary annoyance for people to be banging at the door insisting that there's change. It would be very annoying at work, because they're not offering solutions, right? Yeah. But at the same time, you just need to be making sure that people are taking it seriously, and then you want to trust that the people who are taking it seriously are really putting their heads together. But the more you demonize, if it goes towards demonizing, I think that's the mistake, and I think that's changed. I don't think it's as embarrassing to say to the average person, you work in the oil industry, as it was 2-3 years ago. Yeah. Remember, money was cheap then. Stock markets were roofed. These things have knock-on effects. Everyone's happy. Everyone's like a rich billionaire's son, effectively, in the UK, being like, well, you shouldn't do that. You get all moral and on your high horse because you're rich. As soon as you're not rich and you're worrying about where your next like food's going to come from, then you start to think about it a bit more practical. But it doesn't mean you take your foot off the gas. You just have a more intelligent and proactive conversation. I think we're getting there. So you guys are the future, right? As am I, hopefully. And it's just one of those things. You just gotta feel inspired and motivated by that, but not, I think going the other way and saying, stop doing that, you're annoying me, you're idiots. I don't think that's wise for you to do. Not that you are. I'm just saying. I prefer when people come up with, they've got this massive platform now. Yeah. They do, and that's so get them on this podcast. That'd be quite interesting, right?
Yeah,
so what can we do? How can we help?
It's just so human, isn't it? Everyone would rather, have fun and glue themselves to a road than they would like sit and write 50 letters to their local MP. It's just such a human reaction. Like, it brings some kind of levity to some like crushing situation, because I think there is like that element of futility about it. Like,
they're risking arrests, like risking being arrested. They go to court. It's gonna be on their records, right? So they're risking a lot for this for this cause, and for that, I think they do genuinely believe in their cause. There's a lot of anxieties around this, around climate change, very understandable. But another thing is, I think over the events of past year has really shined a light on the importance of energy security.
Yeah.
Has always been a buzzword, but it really has come to the forefront last year, especially with rising energy prices as a massive contributing factor to inflation. But also, not only that, you have energy security, you have sustainability, but also the equation of geopolitics, because ultimately oil is the same around the world. It's dependent on geology, chemistry, but it also depends on which countries are producing it, exporting it, as we've seen with Russia, US, Saudi Arabia, the big three, and massive contentions with with moving, trying to reroute flows of Russian oil. And one thing actually which could be an environmental problem, which I've seen from articles, is the increase of ship-to-ship transfers of crude oil over in the ocean, because because a lot of Russian oil is being sanctioned, or there's a price cap on it, right? But of course, Russia is still producing a lot of oil, and they need to get this oil to some places. A lot of we've had the stuff in the past with Iran, Venezuela, and FT did a very interesting article on North Korea recently. It's a lot of ship-to-ship transfers. There's a massive shadow fleet in the world. That's they're very, very secretive. They close their transponders when they are transporting, moving across the oceans. There's essentially a black market for oil, and these S2S transfers usually happen at nighttime. Before, they did it close to the coast, the shorelines. Typically, if something goes wrong, rescue teams can come really fast. But these days, there's been more in the outer oceans where it's much deeper. So there's essentially at this time it's more prone to
environmental risk and spillages and things
spillages, because when you venture further out into the ocean, the weather becomes more volatile, right? There's more it's prone to storms, higher waves, and all of that. So higher risk of environmental just a higher environmental hazard is just riskier. So that's something to consider as well, in addition to all the climate change stuff.
Yeah, there's
like
a lot of
the
nuance,
oil spills.
essentially.
Mm.
No,
Yeah.
like 100%. And what I do like to see, I don't want to put the country in more debt than it already has, 99% of GDP, but the Labour plan to get 28 billion, I think it is, to invest in renewables and be a leader and be, a world leader and get going with it, is quite attractive in some respects. At least that leadership to be like, okay, fine, to your point, Audrey, that there's going to be other countries polluting, but you do have the sense of it's going to be the future eventually. You get started now, you be the leader in it. You got all the technology, you got the innovation. I think that does wonders for the economy. So at least it's positive thinking, and that's more of the same.
Yeah.
But again, it just comes back to the argument. Let's just not demonize. Let's get together. But that's not a very human thing to do, Martha, as you would say.
I guess countries looking at more becoming literally self-sustainable and just promoting renewables. You look at America with the Inflation Reduction Act, even Canada's kind of copied them now, looking at carbon capture. I think these countries are really putting their feet forward and becoming completely self-contained, which is a thing that maybe we won't be able to do now because of our lack of natural resources in the country. But I think being able to do that in the future with renewables would be really important.
Yeah, no, absolutely. I mean, one thing we didn't talk about as well, because you mentioned geopolitics, Vincent, is there are all these geopolitical events happening in the world, and it's it's never been more. Okay, I'm not going to say that. It's a very tense time. So Sudan news recently, and we got asked, does that not have an impact on oil markets? And it's Russia-Ukraine is obviously a huge situation going on right now. So why do we tend not to react in the derivative market to these kind of headlines? right now, if there's a huge explosion in Ukraine, it would just be more of the same, and you kind of effectively, well, that's just not going to impact oil because it's already had its impact geopolitically. And the other side of the coin is, well, it might be devastating. It might be a devastating war, but unless it's going to take off oil production, it's not going to affect the oil price. So then you say, okay, but that's affecting the oil physical market. So yeah, it is. But the derivative market, you trade contracts that only price to a localized area physical. So everyone trades the Brent crude futures price. That is underpinned by North Sea oil. So unfortunately, like Sudan is not interesting to the oil derivative market because it's not close enough to the core producing countries. And it is just as simple as that. It's near enough Egypt and Libya, and I guess, not far from Straits of Hormuz and all that. But it's, there's Saudis and Yemenis, they're fighting all the time, and that doesn't have an impact anymore. Even though there was an actual missile that blew up Saudi Aramco, there's just a general feel in the oil derivative market, I would argue, in the pretty much since I started trading in 2013, which was the death of the geopolitical premium. So it's just not talked about as much or ever really now, but it used to be a thing. People used to justify $5 to $10 per barrel higher on Brent crude futures because of a geopolitical premium. So whenever a war happened or anything like that, it was, so oil should be higher. So I guess when the shift happened, that there was so much producer hedging from shale oil in particular, and there was a lot more production in the world of physical, the markets were starting to be way more balanced and actually oversupplied. And it became an incrementally undersupplied market to an incrementally oversupplied market. So markets tend to move more down than they do up unless you have a really, really, really big crisis. So I remember my first trade to get short flat price Brent crude futures in let me get this right, I think it was 2013. And the beginning of 2014. And what happened was, as soon as I got short, ISIS invaded Iraq and the market went bid. And then it took about $5 or so, went up, and then crashed all the way back down. So I got stopped out, and it went all the way down from that point, all the way from 110-ish down to like 40, and then beyond that at one point. So that was like the straw that broke the camel's back almost. Like, it was the end of this where you've got to buy crude futures because there's a war. Because it's like, but what actually is it going to do now? Because there's so much supply in the world. How is it actually going to impact us? And that's what people want to know. So the following year, we had the Ukraine annexed by Russia. I was like, oh, great, we're long. And it just went up and then straight back down again. And actually, it was a time where the volatility was nothing. And it didn't even get more volatile. So it's just from then on in, like, it just hasn't had an impact. So even the war with Russia-Ukraine, yes, of course, the threat of nuclear war was huge, and that was causing a lot of geopolitical stir. But as soon as that was seemingly contained, that kind of got the sting out of people and people positioning. The genuine impact was the gas prices, right? That actually turning off gas and actually having to have oil to gas switching and actually causing panic about supply. So that made complete logical sense that impacted the oil markets. But it was, I'm not going to say it was nothing to do with the war, but it's that's how oil traders are reading it now, is what I'd say. So Sudan happens, it's pretty much an irrelevant headline to oil derivatives for those who want to know. And that's it. I think we'll probably leave it there unless you guys have got anything else you want to talk about.
No, that's really interesting though, that whole war thing. Because I guess coming into that was like the main thing that was happening when I first joined the industry. So I just assumed
the Russia-Ukraine.
Yeah, exactly. So I was like, war, bullish, oil, but
I mean, it's
depending on where it is, I guess, is your point. Like what the countries do on the back of it.
Well, to be clear, this is how we think about markets, right? It's when you're trading a derivative contract, it's about the buyers and sellers who trade it. So what I'm saying is hedge funds will probably still react, and the faster money will like, oh, that should be bullish, so I'm going to buy.
Yeah.
But the oil traders, in particular, the oil traders who have disproportionate volumes for the rest of the market for a relatively fewer number of people, I think it's not a boy who cries wolf, but they know the market's incrementally oversupplied when you really kind of wait, if everything was back online.
Yeah.
So it has to be very convincing that it's going to and they've been stung so many times, like I say, like the ISIS thing and then the Ukraine thing. But the more that happens, and like another one was Syria, actually, at the time, that Obama's red line that was pretty mental time. But again, it was diminishing in terms of its impact, and these days I would say even less so. And I think if you combine that with OPEC cutting in the middle of a war, it's just these impacts, even a fundamental impact, are just having less and less of a kind of convincing argument that we're going to see oil at $200 per barrel. If it's not going to happen in events like 2022, it feels like that was the last straw, like the last time we could have called for $200 oil. I don't think it ever happens again, because it was so extreme and it was such a threat, unless there genuinely is a world war. But ironically, in a world war, you know, no one's working in the economy. They're all at war. The prices would probably go down. Who knows? Yeah. But that's what my boss used to say, that I had in my last place. War is bearish unless it's in the Middle East, because it damages economies and, you know, industry, and ultimately it hasn't actually taken any oil offline if it's not in the Middle East. Yeah. So all that in combined, I just don't think, sorry, my point, going back to my point, oil trade, what's important is oil traders aren't reacting to that, and that's what's important. If they all decided to react to that again, then maybe it would have an impact, but they all seemingly collectively decided that's not that big of a deal now, and you're seeing it again with OPEC now. Yeah. So they've got to get back the narrative that they can control the market, because it's definitely not there now.
That's interesting.
Yeah, it seemed like there was just another attempt, on April the 2nd. They definitely want to set a price floor for oil, but it's just similar to, you know,
they may have made it worse.
May have made it worse. I remember last year, October, OPEC cut announcements. Yes, sure, the price floor was $90 per barrel, and not so long afterwards, prices came off, sold off to early 22 levels, pre-war levels, even below $80, and that was right before the price cap. So it's interesting to note that usually OPEC cuts at more when oil prices are much lower, but recently they cut when prices are 80, 90, 75. Comparing that to historical trends, it is still really, really high compared to previous levels. So that's something that's very interesting to think about.
Thank you.
Thank you.
All right, we'll leave it there then. Thanks everyone out there for listening, and thank you to Martha, Audrey, and Vincent for chiming in. It was a very interesting debate, and going a bit outside of oil, that was interesting this time. So hopefully more of the same, and hopefully it's received well. So see you next week for more of the same.